Good morning, Kevin.
Good morning, Earl, my friend. Great to see you as always.
Absolutely, man. Great time of the year. Weather's beautiful, you know.
Absolutely. I spent all weekend working in the yard. My wife loves her backyard flora and fauna. So we built out this beautiful pollinating garden and all these gorgeous flowers. Then she realized we don't get any sun there. So now my project this week is building grow lights outside so her flowers outside get enough sun.
Hey, look, that sounds like a very, very interesting project. Speaking of growing, I did get my first strawberries in my raised bed this weekend.
Nice.
Yeah, I was totally off subject, but I got my first strawberries. I kind of feel like I got a light green thumb.
Very good. Very good. So what should we chat about today, Earl? What's hot and what are you hearing lots of questions about?
Man, the big news and the big news that I've been seeing everywhere this morning is the huge push on the jobs report. I think jobs were expected to come in being added in April right around 170 something thousand. They wound up coming in above 200 in the two teams, I believe, 200,000. And the reason that this is causing such a buzz is because, everyone was thinking before that with inflation, the Fed had kind of said, okay, we raised this quarter point. We may, pause things for now. But with the jobs report, the biggest issue is now people thinking, hey, the Fed may have to do more aggressive actions as far as raising the rate a little bit more to try to combat it, which is, I'll be 100% honest with you, man. It's a little bit conflicting to me, because how is something good but bad? Man, what's your take? I'm just,
Conflicting is the word you use there, which is absolutely the best way to describe it. And the jobs number was very unexpected, but there was conflicting information in there because they revised down the last two. So
Right.
This one came in higher than expected, but they went back and said, okay, well, the last two weren't as good as we said. So, who knows what the reality is? And it just appears like that so many people have just left the labor market after the pandemic. They're just not out there. They're not looking for jobs. They're not employed. Maybe they've gone self-employed. They've started their own small business. They're making crafts and selling them on Etsy, whatever it may be. But at the end of the day, employers are still hiring. There are still job openings, but there's so many layers to that onion. Just because there's openings doesn't necessarily mean that people just haven't gone off to do something else.
Right.
So
Right.
jobs is significant, and it is one of the factors the Fed has been looking for to help show as an indicator of inflation slowing down. So that jobs number wasn't helpful,
Yes.
but it's strange. Yeah, the jobs number is important because of inflation. Inflation is important because of mortgage rates.
Right.
But then on the flip side, as the economy stays strong, that's a lot more people out there house hunting, a lot more people out there with increasing income, and with limited supply, that makes it tough. I had customers this weekend. The house was listed for, I remember exactly, it was under 750,000, like maybe 725 or something. They offered 775, and they were one of 12 offers, and they got beat out.
Yeah.
So even at high price points, there's just a lot of people out there shopping and just not a lot of inventory. Is that kind of what you're saying?
Yeah, absolutely. And that's another thing too. I have clients from 200,000 to $1.5 million. It's the same thing all across the board. It's not like it's just, localized to a particular price point right now, as though we've seen in the past. No, right now, everything from the top to almost near the bottom levels have the same increased multiple offers, the same increased overpriced overpriced properties that we're seeing. And it's just I've been in real estate for a while. I've never seen anything like this. I know some people who've been here not longer than me, they're saying they haven't quite seen things in this same multitude or capacity where you have a super strong seller's market that's like crazy ridiculous right now.
It was that way in the very early 2000s.
Yes.
Like,
And
2000, 2006.
Right. And see,
there were fist fights at open houses.
oh my God, it was ridiculous, and I'm not going to say any names when I say this, but I sold my first property. I can't even explain how I sold the first property, because I did it and I knew little to nothing about the whole situation of how bad it was. But it was sold before the ink could dry. I mean, and
people just got to keep the faith and be aggressive and do it now, because when rates do come back, when rates do hit low to mid fives, there's just going to be that many more people out there.
Absolutely. And I heard a great quote too this weekend. They said, you don't wait to buy real estate. You buy real estate, then wait.
Oh, that's perfect.
That quote said a mouthful, and I was talking with some friends and colleagues of mine this weekend as well. And I was telling them, I said, hey, if the house that you need is there right now, go get it. When the rate's correct, refinance in 6 months. Get it to the numbers where you want it. I think a lot of big flare is that a lot of people are looking for, those 2%, those 2.5%, those 3% rates. And I'm telling people, if you're waiting on those, you're going to wait a long, long time.
Oh, that's why we're in
never come back.
Mess. We're in this mess because the government artificially threw all this money in the economy, gave us those low rates. Now that's what's causing this problems. We don't want that back.
Not at all. Not at all. Like I said, it's been the over correcting that's caused this whole issue completely.
Yeah, man. Well, hey, I like that. Don't wait to buy real estate. Buy real estate and wait.
Yes, sir. That's
a great place to end.
That sounds like a wonderful place to end. Kevin, it's always been a pleasure. I'll see you soon.